Are you interested in paying off credit card debt and finding out some strategies to do this responsibly and in a savvy way? Stick around. This is Paying Off Credit Card Debt, Getting Your Act Together from Your Money Mom. There is a post with all of these details on yourmoneymom.com, but this video and this podcast is another way for you to get the information and receive it in the way that's best for you. So let's start by talking about the fact that Dave Ramsey is kind of right when it comes to this. So I've talked about in the past how on some areas specifically related to credit cards, Dave Ramsey is not necessarily right. He's done a lot of great things for people in personal finance and helped a lot of people get out of debt. And on credit cards, in this context of being in debt in credit cards, he's absolutely right that it's just a bad thing and should be avoided at all costs. This is for you if you want to learn about using credit cards responsibly. It's also for you if you have one or more credit cards with a balance or balances that you don't pay in full every month. You'd like to figure out the best strategy to pay them off, and going forward, you want to use credit cards responsibly. Let me just start by saying this is a judgment-free zone. If Dave Ramsey or some other personal finance people are the kind of Jillian Michaels mean trainer, I'm sort of the Planet Fitness judgment-free zone person. So we're going to start off by our ground rules here is no shame about the credit card debt you've gotten into or any financial mistakes you've made. We've all made them. At the same time, no magical thinking. No thinking, if I don't look at the credit card statement, it doesn't exist. Or if I hide it from my family, it's not there. Knowledge is really your power when it comes to credit cards, knowledge about how credit cards work and paying them off in the right way. So getting that information is going to be really important. So the first step is going to be to get your numbers straight. So take a time to gather your information for each of the credit cards you have. The full balance currently, the APR, that is the interest rate on the card that you are charged. You might be shocked at how high it is for some of the cards. Also, your minimum monthly payment on any cards that you have an outstanding balance on. In this, a spreadsheet can be your friend. This is something I put together for clients. It's pretty simple. You can put it together pretty easily yourself to just list them all so you can see the debt pay down as you do it. One of the ground rules here is that I only want you to use one credit card with a zero balance, ideally, and to pay off each month. Now, I know some people, when they talk about paying off credit card debt, say you should cut up all your credit cards and never use them until everything's paid off. But I think it's healthier to practice the good credit card skills you'll need if you are going to use credit cards going forward. So if you have one credit card with a zero balance and you only put necessities on there like gas in your car or a few other things, and then pay that off every month, you're going to be developing that habit and having a good skill there that you can use going forward, as at the same time on a parallel track you're paying off all those other credit cards or one credit card. So step 2 is going to be to choose your poison, or really choose your debt payoff method. And there are many different ways to talk about it. Let me just talk about the main ways that are out there that people talk about a lot. First, returning to Dave Ramsey, is his debt snowball method. And a lot of people have met with success about this. What you would do is you would take your credit card debts, in this case, from smallest to largest, and pay off minimum payments on all of the accounts except for the one that has the smallest balance, and put everything else at that debt. Once that debt is paid off, you continue to pay the minimum payments on the other cards, and then roll all that extra money from that first debt paid off into now you can now devote to the next biggest, and so forth. This can be very positive because you can see some quick wins, and it can be very encouraging. Mathematically, it doesn't necessarily make sense, and then that's where some people look into the debt avalanche method, popularized by another personal finance person, Susie Orman. And her debt avalanche method says you should list your debts in order of interest rate. So if you have the highest interest rate would go first, even if that's your largest debt, you would pay that off first and then go down from there. The benefit of that is you're doing it mathematically correctly, but the downside is you may not see these small wins that can really help keep you motivated through this process. Another debt payoff method is through credit consolidation, where you get a personal loan for all of your credit card balances and then pay them off gradually. The benefit of this, really the only benefit of this, is you would generally have a lower interest rate. The downside is it is just not a good idea and really not going to help you going forward be responsible with money. And so I really do not recommend this one at all. What I like to promote and talk about with clients is your personal debt payoff method. And so it's some kind of a combination of the ones above. And what I mean by this is you would rank your debts in the order that makes the most sense to you. So for some people, it would be smallest to largest. For other people, perhaps there's one credit card that you spent money on and it wasn't a positive memory associated with it. So you'd like to get that out of the way first. There's a lot of ways to organize this, and we'll talk about ways to perhaps bring down your interest rate or make this go a little faster once you're well underway. Now, step 3 is to consider advanced options. So first of all, when it comes to considering opening a new credit card to help you pay off your credit card debt, is that you're not going to rush into anything. So you're going to start by watching this or reading articles on yourmoneymom.com or other resources. And then after you have a track record of 3 to 5 months of paying your credit card debt down as you've set out in the beginning, you set your goals, and then also paying that one credit card in full every month, developing those skills, then you can move forward and talk about other things. At the same time you're paying those off in that first 3 to 5 months, you can also contact the credit card company or companies to ask them to reduce your rate. This can be a very successful method and a way to really cut down on the amount of interest that you are going to pay on these credit cards. And if you've been a good customer, many times credit cards will be very willing to keep you as a customer by reducing your rate. And it can't hurt to ask. You can even call back right away if you get somebody who's not nice. Some of the things I advise clients are to be overly nice about it, to be positive as a customer, and to really be persistent. Now, once you have an amount, even on one of your credit cards, that you can easily pay off in less than a year, you may want to consider a balance transfer card. Now, balance transfer cards allow you to transfer balances from one card to another, so perhaps a high interest card to a zero interest card for a time period. So it's usually between 12, 15, 18 months that you don't have to pay any interest at all, so you can just pay the principal on that loan. But then, of course, it's going to reset at probably an even higher rate after that time. So you only want to enlist this strategy if you can see you are consistently paying things off in the first 3 to 5 months, and then you have the balance transfer card and you can easily pay that off. I advise people usually, if it's a 15-month loan, to ensure that you can easily pay it off in a year. So if there are any curveballs there, you've got a couple of months of margin, because margin is a really important quality to have when it comes to your financial life. And so some balance transfer cards actually charge you a small percentage to actually transfer the money over. But there are a couple of cards like the Chase Slate, at least currently when this is being recorded, that do not charge you a fee to transfer a balance at all, and they've got the zero balance for some period of time, 12, 15, 18 months, depending on the card. Getting one of those could be a really good idea and could really accelerate your debt payoff. But if you do this, just like with any kind of credit card, you need to follow the rules scrupulously. So as an example, if you do a balance transfer, usually, and there's no fee to transfer for a particular card, you usually have to do so within the first 30 to 60 days of opening the card. So you have to be on top of that. The other thing is you have to make sure, whatever the parameter is in terms of the payoff period, that you are ahead of that. Now, what are some of the objections to getting a balance transfer card? Let's talk about those. So first of all is that opening a new credit card will hurt my credit score. This is actually a false assumption. Sometimes people when they open a new credit card, it can be a small reduction in your credit score, but usually within a few months it actually goes up and goes up higher than it was before. And there are numerous reasons for that I'm not going to go into here. But if you were in credit card debt, your credit score is not going to be as important to you right now, because I would not advise, if you were in any amount of credit card debt, to be getting a mortgage or other big loan, because that you need to make sure you've got margin and all the debts paid off before you move on to that. So the hit to your credit score, if there is any, which oftentimes there is not, is very temporary. And by the time you would be needing your credit score for a loan or a mortgage, you will be well on your way out of this issue, and it will be a moot point. Another objection is that you might think you will run up the spending on a new card because you have one and you might have a spending limit. If this is true for you, you are not a good candidate for a balance transfer card. And knowing about yourself is very helpful. If you fear that you might overspend on a new credit card, then you are not a good candidate for opening a balance transfer card. And it's good to know that about yourself so you can avoid getting into worse debt because of that. That would not be a good strategy for you at all. So in that case, it is a true objection. Finally, you may think, a la Dave Ramsey or some others, that credit cards are evil. And if you do, then this strategy would not be for you as well. Disagree with that. I think credit cards can be used responsibly, and there are a lot of perks to using them and protections. But if you are of the opinion that they're not good for people or it's a bad thing, then you would not want to enlist this strategy. So what are our key takeaways when it comes to paying off credit card debt? First, no shame and no magical thinking. Get your numbers straight. Choose your poison, your way to pay off debt, and stick with it. Consider advanced options, such as asking for an interest rate reduction or a balance transfer card if you have been consistently paying things off at a good clip. And then going forward, resolving to pay off your credit card in full and on time every month. That's really the number one rule of credit cards. And if you can get to that point where you're sticking with it, you can then move on to take advantage of a number of the perks and rewards that certain credit cards offer. Thanks for watching, and I would appreciate your feedback. Let me know what you think. Thank you for watching.